sure that everyone in the company is on the same page. Management, as I said, has responsibility for establishing internal controls. And again, the best that you're going to do, as I said, there's no perfect system. So it's a reasonable, right? You can't provide absolute assurance, but you want a system in place that provides reasonable assurance. As I said, because of collusion, this is why you can't honestly say that you can provide absolute assurance. Also, as a result of Sarbanes-Oxley, because prior to Sarbanes-Oxley, auditors did not have to look at report on internal controls, right? It was the audit firm or audit team's judgment whether or not they were going to evaluate internal controls. After all of the auditing and accounting failures, Sarbanes-Oxley said, oh no, you need to go back to evaluating internal controls. Evaluating and testing internal controls, and in fact, we're going to make sure you do that because you're going to be required to report on it. Management is also going to be required to report on internal controls. So management has to provide a report on internal controls, and then the auditor also provides a report on internal controls. And basically, management is saying we take responsibility for designing, designing controls that are effective. Management also has to, back up a minute. One of the other things is because of the accounting failures, you had a lot of, or you had some people saying, well, we didn't know, right? We just didn't get down to that level. We relied on, the internal audit director to ensure that controls were operating effectively. What Sarbanes-Oxley essentially did was no, you have responsibility. It created accountability. And so I think that tells you the importance of internal controls and how regulators viewed the importance of internal controls. So it again, not only made management responsible in terms of and accountable, but also auditors. When we talk about audit reports, we'll talk about this in more detail, but the auditors can issue an integrated report, which includes the report on financial statements and the report on internal controls, or they can issue two separate reports, one on the financial statements and one on internal controls. But in any event, they have to report on internal controls. The auditors have to obtain SAS 109 and the PCOB. Standard number 2 requires the auditors to obtain an understanding of internal controls for every audit. Now, all that's saying is that you have to consider internal controls in your audit approach. Now, and you'll see it's a significant part of it's a significant component of the audit risk model. You as an auditor can decide, for whatever reason, we're not going to rely on internal controls. But you have to document that. You have to show that you've at least assessed control risk. And based on your assessment, you're either going to rely on internal controls or you're not. And that has to be documented. You still have to report on internal controls.